Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, May 17th, 2012 is sponsored by Realtic. All right, let's get right into it, folks. The markets are slowly grinding towards a double bottom on the intraday chart. You can see the support level right here, right around the 130, 140. That'll be support on the downside. Your upside resistance is very clear here. You had a pierce of the level right here, and then you had another pierce here, and so far you haven't been able to get through that level on the upside, which is right around the 132 and a quarter level. All right, so keep your eyes on that area. That is going to be the key area for this market right now on the upside. If it gets through that 50 moving average, intraday will be your next level of resistance. Noting here some of the keys to today's action. I mean, why is the market being dragged down? The obvious answer is still European worries. I mean, Greece is a mess, Spain is a mess. I mean, it's a mess over there all the way around it. No trader really wants to hold at all through the end of the day. I mean, everyone looks to just move out and dump the plays, dump towards the end of the day and not hold into that period. All right, so I mean, just something to keep in mind there, and continue to monitor. All right, a couple little other things as we get a small bounce on this market. JP Morgan is getting hit again here, and this stock is actually becoming a little bit more attractive. I'm going to show you on the daily chart. Look at that drop on JPM on the daily chart. This is your level, in my opinion, that you're really following. If the stock closes back above this level, I think you're going to get a bounce over the next couple days. That level is basically the 34.45 level. So a close above that, and I think you're looking at some pretty powerful profits in the next couple days on JP Morgan. All right. And again, just something to keep an eye on right now as we continue to follow this market. All right. Looking at Apple, Apple continues to get hammered down $12 on the day. I put out a report earlier today on the level where you would look for a bounce on Apple, and this is it. So it's not that far away now. And by the way, folks, I've nailed the pivot top on Apple here, and it collapsed. I mean, when everyone else, including Kramer, was telling you to buy this thing at 620, 630, I was saying, listen, go short or sell your shares. Don't be long Apple. It's all hype. And sure enough, it has come down dramatically. I mean, you're basically $100, over $100 off the high of this stock right now. Eventually, when you get into this level around the 520 to 525 level, you will get support and you will end up getting a bounce off of that, although it will be a short-lived bounce. All right, so again, monitor that and, just bottom line, continue to profit. I mean, these calls are outstanding. I want to show you some of the calls, guys, because today is a great example of how the in-the-money stocks methodology, which is proprietary, continues to just rock and roll. I mean, the money that can be made here is so much, and it's constant. I don't care what market you're in. I don't care bear market, bull market, nonsense. There is money to be made. And just a good example of that is look at SPG. We were short SPG from this pivot top based on my master calculation of a pivot top on the stock. So far, it just hit our first target today. We made a huge amount of money on the first portion of that from the fall up here all the way down here. I still have half the position remaining because I think ultimately it's going to go lower. I really do think that. So that's just an example of a short, which makes sense, right? I mean, the market's down today, so you're going to make money on your short calls. Well, what about some longs out there? Did I have any longs out there? And the answer is absolutely I did. What was a long? The long was GG. I picked up GG at 32.95, guys. Today it hit a high of 35, and 2 days ago I picked this up at 32.95, $32.95 on GG, which is Gold Corp. All right, today it's up $2. Again, a high of a day of 35.42, and this was a long. Do you see how our shorts are making us money and our longs are making us money? Show me one other person, including hedge fund managers, that are doing that. There's no one else out there. There's no one. Bottom line is, if you read the charts correctly, if you learn the master analysis that we have been teaching our members day in, day out, if you take the swing trade alerts like this one was on GG, you're just printing money left and right while everyone else is getting smoked out there. I can't tell you how many people I've heard complaining, that, in the shopping centers and the supermarkets, oh, I'm taking a hit on my positions. Well, you should learn the methodology and profit with the pros. In any case, that's a good example of how things are going right now for In the Money Stocks members as they just continue to make more and more money. All right, looking at a couple other things, guys. Let's see what else is going on here. A couple stocks that are falling pretty drastically. Caterpillar down over $3 today. Although I have to say Caterpillar is coming into a level where I'm going to start to get interested. Right down here is my level on CAT, and that's at approximately 86.90-ish, 86.95. A Pierce of 87, so it needs another one-day fall probably. If we got another down day tomorrow, I think that could be a great opportunity to enter and profit on the trade. Okay, so again, watch that level on Caterpillar. Good fall though. As I said, JP Morgan, we're watching this. This could be a short term pivot area. You can see a gap window pivot high right here as well that essentially got tagged. And again, there's just so many areas of support in this stock right now. So many areas of support. And there's a gap fill right down there. So, I mean, you're just into some major levels. That's why I'm not too concerned about this. Even if it goes a little bit lower here, I think you're still going to have a bounce off of this low level right here on JPM. Right, JPM is not going away. It's been hammered. Huge drop. I mean, think about this. The stock was 46 bucks. It's now 34. That's a big drop. That is a monstrous drop. Okay. What else? Goldman Sachs is actually up today, up 20 cents on the day. If we go to the intraday, you can see it's off the highs of the day, but still up 20 cents. Bank of America, another stock here, banking stock, down 2 cents on the day, but it's really JPM that's taking the brunt of it. The news essentially was that the company, remember how they took their $2 billion loss supposedly? Well, it might be a little bit more than that. That's what the latest news is. They might actually have lost that third billion, which they were talking about. Jamie Dimon said it could be another billion as well, and it looks like that's the case. Now, honestly, I don't think that's that big a deal for the company because they, make so much money every year, but I think it's a confidence factor. That's really what's been hurting JPM. It'll bounce back, though. Once this passes, you'll see a nice bounce back on JPM, no doubt about it. All right, Wells Fargo is kind of outside the fray. If you look at the daily chart of Wells Fargo, let me flip over to that one. You can see this one's holding up much better than any of the other financial firms. It has rolled over a little bit, but still within a shot of the highs of the year by far. All right, taking a look at a couple other factors here. Let's see what else we have. Scanning through. Let's see here. Yeah, I mean, market for the most part is just kind of hanging in there. I mean, it's just, it's a quietish bleed again, just like yesterday. I mean, if we go to the charts here, you can see, we're just popping around here. We're not at the lows of the day. We're not at the highs of the day. I think the 20 is key to get above, and then ultimately this blue line is the big one, and that would create a little bit of a squeeze to the market. But if you come back down and you take out the lows late in the day, and that's what we've been seeing. I mean, if you look at the charts, folks, you've been seeing the market sell off and, really sell late in the day because no one wants to hold the stocks or anything overnight into Europe. Now, I think there could be a little difference today, although I don't know if it's going to be enough to change the aspects of what we've been seeing. But I think the Facebook IPO could entice a couple people to pick up at the close some positions because they're thinking, all right, tomorrow the markets will bounce on the Facebook IPO. I don't know if that will happen, but it is speculation, and I could see some traders actually buying towards the end of the day on that speculation. Okay? Let me just see if there's anything else of interest out there as the spiders get a small bounce. A couple stocks to watch here, guys. I like Las Vegas Sands, 200 moving average Pierce. You're also coming into this little level right here. This is a good area of support on LVS. I do like it down here quite a bit. In addition, there's a trend line sloping up. Let me show you this trend line here. Let's see here. I think this was the one I was looking at. All right, and right there. So you see connecting through these lows in 2010 and this low right here and then this low right here. And it goes right up into the current price of LVS. So I think that one could be one to watch as well. Okay. So again, that's something to keep your eyes on. First Solar's getting a big pop on some news here. I guess it's not relative to where it is and where it's been trading. It's not a huge pop, but a nice move right there nonetheless. Up about $1 on the day. Intraday, you can see the news just hit a couple minutes ago, about 10 minutes ago, and a nice big pop on LVS on the charts there. All right. Let me just scan through, see if there's anything else of interest. No, I think that's about it for the day, folks. Facebook IPO is going to be the big news over the weekend and tomorrow. Sympathy plays. You could look at LOCM, FFN, which is Friend Finder Network. That one's already bounced. Zynga's kind of already done its thing. Might get a little bit of a pop, but I'm not interested there. I'd look for the outliers that haven't bounced yet. Anything that's kind of somewhat associated with the Facebook type atmosphere that, again, is still at the dead lows of the chart. Those are probably your levels that you're looking for. Alrighty, guys. On that note, I'm going to bid you farewell. I got to go back to making money here. Remember, 7-day free trial at inthemoneystocks.com. You can take it. You can profit with us, profit with the pros ultimately, and just start making money. Bottom line is I showed you the proof in the pudding from the calls. These are research center calls, which are geared towards swing traders and investors. They're there to be had. I gave out the GG a couple days ago. We already are up a couple dollars on that trade. The SPG went out as a swing trade alert about a week and a half ago. We're in the money, taking money off the table at first target on that short. And I will be putting out more alerts for our members in the next day or so. So again, join now. Let's rock and roll, make some money. Take care.